Next, marketing and advertising. Marketing and advertising deductions include all of the costs related to a real estate business. This is digital advertising, print ads, billboards, promotional materials, advertisements in a local pizza place menu. All these expenses are 100% deductible. So agents can deduct all the costs of marketing their business. You need to make sure to include those deductions on your Schedule C also. Line 8, your agent postcards that we were just talking about a few weeks ago. You need to keep the receipts, and you need to understand that that's a 100% taxable credit for you. Sorry, taxable deduction for you. Professional fees. We don't know everything. We can't do it all on our own. There are a lot of scenarios where we have to bring on a professional partnership to get a transaction completed. Agents can deduct any fees paid for professional services related to the real estate activities. This is also on your Schedule C, line 17. These services include your payments to lawyers, accountants, business consultants, other specialists who provide advice to you and services to help maintain or improve your business. As mentioned above, these real estate expenses must also be considered ordinary and necessary for them to be deductible. Professional development and training. Costs that are incurred from this, these also need to be able to enhance your real estate agent skill set, knowledge. These are fully deductible. This is line 27A. The costs may be included in activities like seminars, workshops, specific real estate designations, accreditations, courses relevant to the real estate industry. According to H&R Block, agents must prepare to prove these education activities will help maintain or improve the business. Good news, if you got some additional letters of accreditation behind your name, the work is done for you. All you have to do is bring a copy of what that accreditation is, how it's relatable to real estate, and it'll certainly show that inside of the description of what it was done, and the receipt, the invoice, showing not only what you paid for it, but if you renewed it every single year also. Let's talk about continuing education while we're on the subject. Continuing education needs to be completed in real estate to maintain your licensure. Although it's similar to the professional development and the training on the real estate side, expenses for requiring your continuing education falls under a requirement from the IRS. So this is an expense that's required by your employer or law to keep the current job. So the IRS specifies that an education expense like that, 27A, must not qualify the agent for a new trade or profession. This ensures that the education is directly related to your existing role, not expanding your education for like a side hustle or something like that. Agents who need to renew their license also will be required to take continuing education courses. These typically cost money. The CE Shop is a great option because of its Leap Learning platform. It's an online format. It makes it easy. It makes it quick for everybody to keep their education up to date. The platform includes features like progress tracking, flexible online access. It allows you to learn at your own pace, for example. These are all things that are a requirement for you to maintain and keep your licensing. Your 14 hours of continuing ed that is a requirement for your license to stay active is exactly what I'm talking about here on your continuing education breakdown. Next, this one probably is on the top of it. Office supplies and equipment. Real estate agents can fully deduct the cost of business supplies and equipment essential for their business on line 18 of the Schedule C. Items can include everything from high-tech, like laptops and cell phones, to everyday office supplies such as papers, pens, staplers. You have to keep those records. You have to keep the detailed version of those records and receipts on those purchases to maximize the deduction at the end of the year. But it's there. If you require a new laptop for your business and you're using it exclusively for real estate, this is what those receipts are for. Make sure you get one that is at an applicable standard for the business. It's beefy enough. It's business related. It's at a business build. That is not your typical $200 laptop that you're going to get from Best Buy. You're going to have to get a business edition that understands how to do a lot more work inside of Office and inside of online applications to be able to keep your real estate up. These are the things that you need to be able to consider when you're buying those. Can you buy multiple of these a year? Probably pushing the elements if you're a single agent doing this, but new equipment every year for you so that you can stay at the top of what's necessary to be at the crux of your business. Yeah, makes total sense. And it's expected on your tax form. Travel expenses. This is actually one of my favorites. Travel expenses for business purposes are tax deductible for real estate agents. This needs to be documented on line 24A of that same Schedule C. Deductible travel expenses include visits to properties, client meetings, industry conferences, expanding your businesses into other states, expanding your business internationally. Agents can claim costs associated with the transportation, lodging, other travel-related expenses directly related to conducting those business activities, which brings you to meals. Meal expenses are a critical component of gaining favor and access to clients. Taking out a client for a meal, attending a business-related dinner, these can be partially deducted. Agents can claim up to 50% of the total cost as a tax deduction. It's best to practice keeping the receipts, write them down. Again, if you're using a software like QuickBooks, you simply pick up the app, you hit the receipt spot, you hit the picture, done. You're done. It's all filed, it's ready for you. And it's in a nice, secure cloud environment so that it's easy for you to access at the end of the year and send it straight to your attorney in that QuickBooks format. It is best practice to keep a copy of every single one of these receipts and write down on maybe the back of the receipt, if you don't have room on the front, who you had the meal with, what it was in record for questioning the future. Doesn't mean you had to close the deal. It meant that you were soliciting business to try to utilize them on a client perspective. No, you can't take your best friends out to eat all the time. But if you're taking your friends out because you're soliciting specifically real estate industry business, that deduction can be recorded on line 24B of the same schedule. You get where I'm going. If you've done business with Keystone or if you're one of our agents, you understand everything that I'm telling you. You are awake. You are out in public to do business. You've got business cards in your pocket at any given moment. You are out there promoting yourself as a real estate agent. That means that the efforts that you're procuring clients with is some level of deduction. Track it, maintain it, utilize it at the end of the year. Real estate license cost and dues. This is different than continuing education, right? On line 20, costs that are related to maintaining your real estate license. Those are the ones that are paid to the real estate board. Here with us at our biggest footprint at the Greater Tampa Realtors, the GTAR, as we call it, Stellar MLS, all of those fees and dues, boards, costs that you pay the brokerage every year to maintain membership, these are all deductible. These costs are due typically on a yearly or split over the year basis. They are a requirement for you to have your business open. It should be easy for agents to remember to include them in your tax filings. Professional insurance premiums. This is one that often gets missed, so I like to be able to talk about this every year. A lot of agents need to maintain an insurance premium like a professional liability insurance, also known as an E&O insurance. If you're a broker and you own a brokerage, it's almost mandated that you have this, and most of us get a policy big enough to protect our agents and the amount of business that our agents procure. The cost for insurance premiums are considered necessary because the business expenses and therefore business tax deductions should be added on line 15 for you. This is a big one. If you need to have a higher level of insurance on your car because you drive clients around, for example, that portion of that insurance is also deductible, and you need to make sure to have it broken down appropriately inside of your insurance billet so that it can be proportioned correctly on your tax form. One that a lot of agents don't even think about is your health insurance. Most self-employed real estate agents are not provided with any type of health insurance through their brokerage, and they have to secure their own policies. Health insurance premiums can also cover spouses and dependents in your family if you decide to purchase a group plan, for example. The expense is a tax deduction, and it should be added to line 14 of your Schedule C. It offers significant tax relief due to the high cost of health care, and it's a welcomed tax benefit for those of you that know that you need it, and the government welcomes it.